So this morning when I woke up to an article that's quite surprising. Responsible lending laws to be axed. It was only last year where the Haine Royal Commission recommended changes to the responsible lending implementation. Commissioner Kenneth Haine last year said that the banks were giving loans to everybody without doing proper assessment. They didn't look at the proper living expenses of the applicants. They were not acting responsibly. Moving forward a few months, this year there was a court case between Westpac and ASIC. In the end, Westpac Bank actually won the court case. Westpac has been using uh, Westpac has been using a fixed figure for living expenses without verification. Even though the customer is a Westpac customer, the Westpac assessor did not look at the actual bank account to determine the living expenses, and instead they adopted the figure that the customer filled in on the loan application form. And ASIC, the regulator for lending, argued that it was not responsible and it did not comply with the responsible lending regulations. However, the judge at the court said that even though the customer has been spending more in the past, does not mean that the customer will keep spending the same level in the future. For example, if the customer has been eating Wagyu and Shiraz at a nice restaurant every day, surely if they have financial trouble, they are able to skip those expensive meals and start eating at home. Anyway, that was in the past. The news today is something that's actually more extreme. So the news today says that the responsible lending laws will be scrapped altogether. The banks will not need to listen to it at all. At the moment, banks have two different regulators. One is ASIC, they regulate responsible lending. The other one is APRA, which regulates something else. I don't know exactly what they do, but they look at mainly the funding side of the banks, from my understanding, to make sure the bank has sufficient money to lend. Because remember, the bank, when they lend, let's say $1 million, it doesn't mean they actually have $1 million in their own bank account. The bank actually lends more money than what they actually have. So what APRA does is they regulate how much money the bank needs to actually have to be able to lend. Anyway, the bank argues that they have two regulators, it becomes too complicated for them, and they shouldn't need to have two different regulators. So soon, the bank will only be regulated by one body, which is APRA. The simplification will remove the Australian Securities and Investments Commission from enforcing the responsible lending rules for banks and other mainstream lenders, while bolstering ASIC's oversight of payday lenders for vulnerable customers. The head of the Reserve Bank of Australia, Dr. Philip Lowe, mentioned last month that the pendulum has probably swung a bit too far to blaming the bank if a loan goes bad. He wants banks to actually make bad loans because on a portfolio basis, if the bank does not make a single bad loan, that means they are being too conservative and they are not extending enough credit. Do you agree with this, guys? Comment down below for me. And before you forget, don't forget to hit the like and the subscribe buttons. The argument is that if the bank does not extend enough credit, it will be difficult for Australia to recover from the coronavirus-induced recession. Because how do small businesses obtain a loan for their business? It's very difficult, and historically, a large proportion of the business loans are actually coming from the equity in the business owner's property, because that's the cheapest way to get funding. If you go for an unsecured business loan, the interest rate is going to be very crazy. So there are some unsecured business loan options where the effective interest rate is anywhere from 10 to 30%, sometimes actually 50%. Therefore, for a business to obtain finance that makes economical sense, the best way for them to do that is to borrow against their home. And if you borrow against your home And in many cases, a lot of Australians get the money from their ordinary home loan because the interest rate on that home loan product is normally a little bit cheaper than if they do it under a business loan product. So it makes commercial sense. So with no more responsible lending, what difference will that make? Firstly, this new regulation or the lack of regulation will only be effective from March 2021. So that is still around half a year away. And we don't yet know exactly how the banks will implement these changes. But one thing I'm speculating is that the bank will start using a lower interest rate when they determine whether a customer can afford the loan or not. So at the moment, what I think is one of the bottlenecks in lending is the fact that the bank will use a higher interest rate compared to what the customer actually pays today when the customer applies for a home loan. At the moment, the bank needs to adopt an interest rate which is at least 2.5% higher than the actual interest rate the customer pays today. So if the customer pays an interest rate of exactly 2%, when the bank works out whether the customer can repay the loan, they need to assume the interest rate is 5.5%. That's 2.5 more than the actual interest rate. Now, of course, if the interest rate is higher, if the interest rate is more than double, then the home loan repayment will be much bigger. It may not exactly double because there's a principal component. If let's say today's interest rate is 2% and the future interest rate is 5.5%, the monthly repayment on a principal and interest basis will be roughly 50% extra. In other words, your home loan amount will be roughly 35% less. Okay, you may think 35% less is not too bad, but it becomes worse. If you have two properties, if you have an existing property and you are trying to buy one more, then the whole loan amount from both your existing property and the new one will become 35% less. So the actual impact of your borrowing capacity for the property that you are about to purchase will be bigger than 35% because there are two loans that you have. One is the existing loan and the new loan that you are about to take. It leads to some really funny situations where you cannot borrow a single dollar from the bank, even though historically in the last 1 or 2 years you have been saving, let's say $2,000 a month because you have so much extra income based on your current income and expenses. And another problem with the way the bank assesses home loans at the moment is that they do not look at potential increases in your income. So they always assume your salary is the same as what you are earning today. There's no pay rise, nothing whatsoever. You're stuck on your current salary, but you are not going to get the benefit of the same interest rate. In fact, certain types of income get discounted. For example, your annual bonus normally gets shaded. For example, if in the last 2 years you have earned a bonus of $10,000 each year, and you think this year and next year will also be $10,000, the bank will probably only count $8,000 of your annual bonus. They don't count the full amount. Similar with overtime. Anyway, that's one area which I think the bank will change in the future. They will probably reduce your assessment interest rate so that it's no longer so high, so that you can effectively borrow more. Another thing which I think the bank will change is the assessment of your living expenses. They may start to trust you more. For example, if you tell them you're not going to go out as much as you did in the last 3 months, the bank will probably believe you. Labour's Treasury spokesman Jim Chalmers left the door open to supporting the changes, but he wanted to make sure that people don't get over their heads. We will have a look at what the government's proposing. It wouldn't kick in until March, so we've got time to consider it and consult widely. So what do you think, guys? Do you support these proposed changes? Do you want responsible lending laws to go away, or do you want it to remain in place? Do you think Australia needs it? Do you think you want to have an environment where it is buyers beware, customers beware, or do you want it to be sellers beware, the banks beware? Do you want to have your consumer protection? Or do you think you are an adult and you want to be able to decide for yourself what you can and cannot afford? As always, thank you for watching. And if you haven't already done that, don't forget to like this video. Thank you guys. Have a good day and have a good weekend.